Mr. Chairman. About a month ago or so, you said that there's no precedent to integrate trade uncertainty into monetary policy. In the last few weeks, have you figured out how to incorporate trade uncertainty and this level of trade uncertainty into monetary policy going forward? You've talked about uncertainty many times today.
So my point really was that, to start, that trade policy is not the business of the Fed. It's the business of Congress and the administration. But so why are we talking about it? We're talking about it because anything that affects the achievement of our goals can, in principle, be something that monetary policy should take into consideration. And our discussions and the research we have suggests that trade policy is something that's weighing on the outlook. So I pointed out in recent remarks that the thing we can't address really is what businesses would like, which is a settled roadmap for international trade. We can't do that. We don't have that tool. But we do have a very powerful tool which can counteract weakness to some extent by supporting demand through sound monetary policy. And we think our policy tools support economic activity through fairly well understood channels, by reducing interest burden and encouraging consumer purchase of durables, of homes, and other interest-sensitive items, by creating broadly more accommodative financial conditions, which supports spending and also investment by businesses, and also by boosting household and business confidence. So, I don't want to be heard to say that our tools don't have an effect. They do. But I was making the point that there is a piece of this that we really can't address.
So have you figured out how to navigate it?
Well, I think, yeah. I mean, it's a challenge. There's no simple bottom line answer where I can say, yes, I've got it for you here. But what it amounts to is this. What you see is probably the kind of volatility that's typical of an important, complex, ongoing negotiation. And I think what we need to do is to try to look through the volatility and react to the underlying forces, the underlying things that are happening that are relevant to our mandate. We have nothing to do with setting trade policy or negotiating trade agreements. We're supposed to be reacting on behalf of the American economy to support maximum employment and stable prices. So we need to look through what's a pretty volatile situation. So that means not overreacting quickly. It means not underreacting, too. So that's really what we're trying to do. And, I would say the outlook is positive in the face of these crosswinds we've felt. And so to some extent, I do believe that our shifting to a more accommodative stance over the course of the year has been one of the reasons why the outlook has remained favorable.